really it stems back to there's a neutral rate of policy for the Federal Reserve or the Fed funds rate. And that is what level of the Fed funds rate is restrictive or easy, just relative to the economy or really the financial economy, frankly. Um, we estimate that somewhere in the low to mid 2% range, and it was lower last cycle. So when the Fed raised interest rates from 0 to 5.5%, they overshot neutral by at least 3%. Um, Historically, they're only overshooting it by about 75 basis points. So that's four times more than what the Fed would normally overshoot because they always over tighten. Things are doing well at the time, and they do too much, and something bad happens in the financial system, so they have to revert, or the economy, whichever one matters at the time. Uh, so this time being 300 basis points above neutral, the fixed income market priced in that return back to neutral policy because that's what the Fed always do. They raise too much, they return back to neutral, and we see if they have to cut below neutral because things are going poorly. So heading into the interest rate cutting cycle last September, the market was pre-pricing 275 basis points of interest rate cuts. So the yield curve, if you think about the 3-month Treasury versus the 10-year Treasury, was extremely inverted. It is normally around zero at the start of an interest rate cutting cycle. It was at a negative 170. So there was the starting point was much more than it's ever been. And it's kind of like it was priced for perfection. That there had to be this linear plunge to below 2% inflation because it was going from top left to bottom right for the past 3 years, or sorry, 2.5 years on inflation. And it slowed down in the fourth quarter of last year. So the market priced in less cuts as a result. And you can add in something for the Republican administration having inflationary effects from more fiscal stimulus. That's really what's taking place right now. Is there was a one-way train of disinflation from mid 2022 until 6 months ago or 4 months ago, and now we're just trying to determine is inflation going to stay, meaning core PCE, at 3% or the high twos, or is it going to get down to 2%?